Hello guys and welcome to another TV video. Today taking a look at Cisco Systems Incorporated, an American multinational digital communications technology conglomerate corporation headquartered in San Jose, California. Cisco develops, manufactures, and sells networking hardware, software, telecommunications equipment, and other high technology services and products. Cisco specializes in specific tech markets such as the Internet of Things, domain security, video conferencing, and energy management with products like WebEx, OpenDNS, Jabber, Duo Security, Silicon One, and Jasper. First, we'll start with the valuation. They have a 5.27% free cash flow yield, which is pretty okay. They have a price to earnings rate of 27.1, which is a bit pricey. Now, going on to business metrics, they have okay business metrics. So they have a 10.8% ROIC, a 0.91 current ratio, a 22.7% ROE, and a 19% return on tangible assets. Now going to gross valuation, using the 2025 earnings per share with a 5% projected growth rate and the current yield on AAA corporate bonds, we get $36.04 for the intrinsic value. Doing the discounted cash flow with 5% growth rate, 2% perpetual, and an 8% discount rate, we get an intrinsic value of $45.12 per share. The historical multiple has been 203, but this is just because of 2018. But if we look here, we can see that the actual average multiple has been closer to 17 on 18, so a bit lower than today. Multiples variation, I've compared them to Qualcomm, Palo Alto Networks, Motorola Solutions, and Juniper Networks. All of these are their competitors. And I got a stock price of $123. So this is calculated by the average price to earnings of all of these three, multiplied by the earnings per share of Cisco. The dividend discount model is also pretty interesting. So I've used a 4.5% growth rate with an 8% discount rate. Why did I use a 4.5% growth rate? Well, I put in a 5% for the DCF and the current payout ratio is 62%. So I figured that they want to reduce their payout ratio, and this way I'll just put in a 4.5% growth rate so it grows slower than the free cash flow. For the output, of course, we do the average of all of these three. We put a 50% margin of safety and we get an acceptable buy price of $53.61, lower than the current price. What does this suggest? Well, this suggests that the company is trading near their fair price, but they do not have a margin of safety yet. The margin of safety is the most important thing in investing, especially for value investors, because you want to account for all the risks that there is. So if there is a lot of risk, if there is an inherent problem with their growth, if there are underlying suspicions of fraud or anything else, you need that margin of safety to be 100% sure that you'll get a good return. So, investing without a margin of safety is pretty dangerous in general. I personally believe that Cisco is not a buy and that only a 45 actually dollar stock price will entice me to buy them, but for now they're just too pricey. Of course, you should do your own due diligence. If your numbers work out in their favor and you believe that they're a buy, of course you should buy them. But for me, this is not a company which I will invest in. I suggest you do investing in the value way, like Warren Buffett. You look for high quality companies that you can invest in forever. Actually, I recently posted an article comparing the current stock market situation 2022, and if you check it out, you'll actually see that I talked a bit about holding periods, investing companies, investing stocks, and the quality of stocks and psychology behind investing. So I'd really suggest you check out my article on this topic. It is very good. Also, before ending the video, I'd like to talk a bit about our video for today, ticker data. Ticker data is a tool that I used here. So you see this ticker symbol. I put in, for example, MSFT from Microsoft, and all of this data loads. You can see the price data here. All of this is loading. So we see the business metrics, the free cash flow. We get everything is automatically inputted. So this is a great tool, and I suggest you check it out. I hope to see you in the next video. Bye.